Okay, now this is one question from consolidated statement of comprehensive income. So we have been given this long data and there are some notes, note one, note two. We will read these notes later. Let's first read the requirement. What they ask us, they say that using the information in note one and note two, compute the goodwill arising on the acquisition of beta and gamma in the consolidated financial statement. So it means beta and gamma, they both are subsidiaries because they're asking compute the goodwill on beta and on gamma. So both would be subsidiaries. 7 marks are given here. Then prepare the consolidated statement of profit or loss and other comprehensive income of Alpha for the year ended 31st March 2017. You do not need to consider the tax effect of any adjustments you make. That's very interesting. It will make your life easy because you don't have to make deferred tax adjustments. This is for 26 marks. And then prepare the summarized consolidated statement of changes in equity. Changes in equity, this is for 7 marks. So it's a little long question and we do not need to read all the question, entire question, because we start with the first requirement, which is to calculate the goodwill, and this is only for note 1 and note 2. So no need to read the entire question in the very beginning. You will just overload your mind. Like cash flow hedge, it has got nothing to do with the goodwill, investment income, or decommissioning provision, or probably intra-group trading. We don't need these things. We only need note 1 and note 2, which are related to acquisition of beta and acquisition of gamma. So we start with part A. I'll call it part A, and that part A is about, so I'll start with goodwill in beta. This is what we want to find out. And we know that goodwill in beta, we will calculate by finding out the consideration paid and by subtracting the net assets. So let's start reading it. I'll just have a very quick look. Alpha hold investment in a number of entities, including beta and gamma. The statement of profit or loss and OCI and summarized statement of changes in equity of the 3 entities for the year ended 31st March 2017 were as follows: Alpha, beta, and gamma. And you have been given revenue and cost of sales, gross profit, distribution cost, admin expenses, note 3, note 1, 2, 3, 4, 5, finance cost, profit before tax, income tax expense, profit after tax, then OCI is 0, and then you get total comprehensive income. Okay. So note 1, Alpha's investment in beta. So anything which is related to beta investment, that is, it looks like it is in note 1. So on 1st April 2001, these financial statements are presented for 1st April 2017. So this is the reporting period. The acquisition date was 1st April 2001, which is like probably 16 years ago. Alpha acquired 80 million of $100 million one equity shares, so control is there, and gained control of beta. Alpha paid 150 million in cash for these shares. On 1st April 2001, the net assets of beta had a fair value of 147 million, all of which had been disposed of or settled by 31st March 2017, like the previous year. Alpha used the fair value method for measuring the NCI when recognizing the goodwill on acquisition of beta. The fair value of an equity share of beta on 1st April 2001 was $1.5, which were used for this purpose. So NCI we are going to calculate. So there is 20% NCI. So 20% multiplied by the number of shares multiplied by $1.5, this would be NCI. No impairment of goodwill on acquisition of beta have been necessary in the consolidated financial statement up to 31st March. Beta has 3 cash generating units. On 31st March 2017, the annual impairment review indicated that the recoverable amounts of the net assets, including goodwill, that's important, including goodwill of the 3 cash generating units of beta at that date were as follows: unit 1, unit 2, unit 3, 84 million, 80 million, 87, 84, and 80. Net assets and goodwill are allocated equally to the 3 units, and any impairment of goodwill should be charged to cost of sales. That's important. Impairment of goodwill should go to cost of sale. Uh, where this impairment is going generally, listen, sometimes they tell you and sometimes they do not. If they do not tell you, then you would see that if it is a production equipment, sometimes you have a plant and machinery, there is impairment. So plant and machinery is production. If impairment happens, you take it to cost of sale. Sometimes it is not plant and machinery, it is brand or something. You take it to your administrative expenses. In this question, because we know that, always remember, not in this part A, but in part B, we will make income statement. And income statement consolidation, the most technical thing is cost of sale calculation. The most important thing is to how to calculate cost of sale. Okay. So, and that goodwill is going to be added to the cost of sale in the second part. So we start doing now. Now we need to see what is our consideration which we have paid. So we say consideration, and we paid cash paid. If I'm not wrong, it was 150 million. Yeah. So I'll just keep a little bit like this, and this should be bigger. And here it is 150,000. And we can say that as per question, there is no calculation behind that. So this is 150 million which we are paying and nothing else. And then there is non-controlling interest, and non-controlling interest we are measuring at fair value. So you need to see that how many are the shares. There are 100 million shares, 80 million purchased by parent, 20 million are bought by NCI. So we would say that, so it is 100 million multiplied by 20%, which is NCI, multiplied by the value of the share. I think it was 1.60, 1.50, 1.50. 20% into 1.5. So this is the value of NCI, which is 30 million. So these are the two things. That's all. So what was paid was 180 million. And you can say that net assets of beta at acquisition. And there are not any fair value adjustments which have been given. There are no fair value adjustments. It's straight. It is very simple. It said that it had 147 million, net assets of beta 147 million. That's all. No fair value adjustment. So that is pretty simple. Just write down here 147 million and you make a total. Whatever comes, that is going to be your goodwill. Pretty simple. Goodwill arising in beta. And by the way, we are going to take this goodwill and split it between 3 units. When we will calculate the impairment or recoverable asset, which they gave us before this information, they said that beta has 3 cash generating units. The annual impairment review indicated that the recoverable amounts of the net assets, including goodwill, of the cash were as follows. So, and goodwill are allocated equally to the 3 units. So you can add 11 million in unit A, 11 million in unit B, 11 million in unit C. But that is later on what we need to do. So this unit, this goodwill of 33 million, actually it belongs to 3 cash generating units. Then we calculate goodwill in gamma. So again, the same format. Now you are not paying cash. How do you acquire gamma? And by the way, let me just put it here and then I will take it up so that we don't do scrolling a lot. So goodwill in gamma, how do we calculate? On 1st August, Alpha acquired 60 million of 80 million shares. So in gamma, it says on 1st August 2016. Now, please pay attention. Your financial statements are prepared on 31st March 2017. This acquisition happened on 01 04 2001, like 16 years ago. Okay, so that's a long old story. But Gamma you just purchased somewhere in the middle, because 31st March 2017, and Gamma was acquired on 1st of August 2016, which means 6 months period. We will do it when we will make our consolidation. We will need these dates. So on 1st August 2016, Alpha acquired 60 million of the 80 million shares, equity shares in Gamma, and gained control. The acquisition was financed as follows. Alpha issued 2 new shares to former shareholders of Gamma for every 3 shares. Alpha acquired in Gamma. On 1st October 2016, the fair value of equity share in Alpha was 4.50. So I would say consideration transferred, and you can call it cost of investment, whatever. What is? First is share exchange. So there are 80 million share, and we are buying, we are buying 60 million shares, acquired 60 million. So 60 million shares we are acquiring, and for every 3 shares we are giving 2. So multiplied by 2 divided by 3. Multiplied by 2 divided by 3. And then the share price in parent company, in Alpha company, is 4.5. So this is 180,000. Second thing, Alpha agreed to pay a total of 16.2 million in cash to the former shareholders of Gamma on 31st of July 2017. You are acquiring on 1st August 2016, and you make a payment of a deferred consideration of 16.2 million. And of course, we need to discount it because we are paying after 1 year. We are paying after 1 year. We made a promise that, okay, now I'm giving you shares. After 1 year, I will give you cash, 16.2 million, but I will give it after 1 year. So that is called deferred consideration. It is 16.2 million, but we need to find out the present value, and our discount rate is 8%. So that's all. 16.2 million divided by 1.08. So point number 2 is also done. Alpha agreed to issue additional shares in Alpha. Agreed to share additional shares to the shareholder of Gamma on 30th September 2019, which means after 3 years, if the cumulative profits of Gamma for the 3-year period to 31st July August exceed a target amount. On 1st August 2016, at the date of acquisition, the fair value of this contingent equity consideration was 26 million. So we call it contingent consideration. And how much it is? It is 26 million. You add all 26 million here. You have to pay this amount 26 million after 3 years, but you do not discount it. Just like this previous amount, we discounted. We promised to give 16.2, but we discount it with 1 year and we show 15. But this 26 million, I am not discounting. This 26 million, we are not discounting. Why we do not discount? Because it says that on 1st August, which means the current date, the fair value of this is already the fair value, and it is already on 31st August, which means that it is already discounted. It is present value. So this is what you are giving away. This is 221 million consideration. And if we now see that net assets of Gamma at acquisition. So how much are the net assets of Gamma at acquisition? It says that, okay, so Alpha has not accounted for this acquisition in its individual financial statement. However, you can assume that no impairment of the goodwill on acquisition of Gamma is necessary. Alpha has resolved to use the proportion of net assets method for measuring the NCI. And by the way, I'm sorry. I ignored here NCI.
What happened? Huh?
We should be having here NCI. NCI I did not include it. So NCI will be done at proportion of net assets. Okay. So now it is not going to be done with fair value with the number of shares. Previously, we calculated NCI with the number of shares because they told us that NCI is measured at fair value. In this question, they are telling you that NCI is measured at proportion of net assets. So we need to find out the net assets. Okay, let's start reading it. By the way, what were the net assets? Okay, let's keep on reading. Okay, proportion of net assets. On 1st August 2016, the date of acquisition, the fair value of the net assets of Gamma were the same as their carrying amount in their financial statements of Gamma, with the exception of land whose fair value exceeded the carrying amount by 30 million, we will increase it. Plant and equipment whose fair value exceeded the carrying amount by 12 million, we will increase the net assets. And the estimated useful life of the plant and equipment on 1st August was 5 years. And this 12 million will be depreciated on 5 years basis. And whatever depreciation you will calculate, it will go and it will be charged to the cost of sale. Cost of sale will increase as a result of this extra depreciation. All depreciation of plant and equipment is charged to cost of sale. You can assume that profit of Gamma for the year ended was accrue evenly. Okay, so then how much are the net assets of this company Gamma? Okay, so we've got this part here. It was missing, we just put it here. Summarized statement of changes in equity on 1st April 2016. This is the date when acquisition of, when did we acquire Gamma? We acquired Gamma
1st August.
1st August, okay? On 1st August, we are getting Gamma. But what we have here with us, the information is on 1st of April, 2016. And this is Gamma. So you have Gamma balance at 1st April 2016, 166,500. Comprehensive income for the year, 40,500. So this is beginning of the year. And dividends paid during the year were 16,000. So now see here, this company had a worth in the beginning of the year 166,500. Okay, then it made profits during the year 40,500, and of course end of the year they paid out 16,000 as dividend. Now we are getting this company, this is 1st of April 0104. We are getting somewhere here 0108. So on 0108, what you will have this much, plus you will have some profit, this much of profit also added. Do you understand my point? I mean, if I ask you that how much are the net assets on this date, so you would say opening net assets, which are on 1st of April, plus if there is any profit which has been made until 1st of August, like April, May, June, July, 4 months profit. 4 months profit we need to find out. So I would say that here, net assets, I would say net assets of gamma at 0108/2016, like 1st of August 2016, it should be net assets at 1st April, and I would say add profit for 4 months. So on 1st April, it was 166,500. 4 months profit, how would you calculate? What is the profit for the year? Profit for the year is 40,500 divided by 12 multiplied by 4. 4 months means April, May, June, and July. So this will be there. And plus the fair value adjustments. Because on the acquisition date, you made some fair value adjustments. You said that land was 30 million more and plant and equipment was 12 million more. And any upward revaluation, any fair value adjustment, it increases the net assets. So I would say that fair value adjustment on land and fair value adjustment on PPE. This was 30 million and this is 12 million. So these are going to be, this is going to be your 222 million. So this is your net assets of gamma on 1st of August. And from this net assets, we say that non-controlling interest is measured as a proportion of net assets. So how much is the non-controlling interest? Now, you know that in gamma, what happened? Total were 80 million. You purchased 60 million. So it means that 6 out of 8, which means 2, it is, 3, and it is 4. So 3 by 4 you are buying. Parent is getting 3 by 4. So NCI is 1 by 4. 1 by 4 means 25%. So 25% is the value of NCI. So I would say 25% multiplied by what was the value? 222,000. 222,000. So this is the value of NCI. So we say that total consideration, here we find out. So we say that consideration. See here, for gamma, your consideration, it consists of 4 things. Number 1, the share exchange by the parent. Number 2, the deferred consideration and the present value of that. Number 3, the contingent consideration. And number 4, the NCI, which is calculated as proportionate of net assets. And then once you do that, then we need to calculate our goodwill. So now we know that consideration transfer is 276 and net assets, of course, these are this one. And I can just put it with, and I can say here, goodwill in gamma. And goodwill in gamma will be the difference of these two. So this number we need 54,500, 54.5 million. And the goodwill here was 33 million. Now let me do like this. I'll just make it with formatting I'll do, and we'll take it up. So this was our first requirement for 7 marks of calculating, 2 goodwills, goodwill in beta, goodwill in gamma. We would be needing it because there might be some impairment of cash generating units and others. So we need goodwill, and any impairments will go to cost of sale, etc. Anyways, part A, which was your first requirement, that is done. And now we need to move to part B, which says that, preparation of consolidated statement of profit and loss and other comprehensive income. Now, before I start this thing, the second part, B part, if you have any question until part A, you can ask, or otherwise we'll start part B.